The secret to finding the next monster stock run isn't about some crystal ball or a complex algorithm, but about history. In the chaotic world of financial markets, we're all searching for that elusive edge. But the most successful traders, legends like William J. O'Neill, Mark Minervini, and David Ryan, they found their edge by looking backwards. They built fortunes on one powerful, enduring principle: history repeats itself in market behavior. These trading titans didn't just guess, they rigorously analyzed thousands of past winning stocks. What they discovered was a consistent blueprint, a set of identifiable characteristics that appear again and again across different decades, industries, and market cycles. Understanding this blueprint isn't just academic, it's a game changer. It sharpens your pattern recognition, builds unshakable conviction, and gives you a profound advantage in finding the next true market leader. So, what exactly is this blueprint? What does a stock look like before it makes a life-changing move of 200%, 500%, or even 1000%? It leaves a distinct set of footprints. Let's break down the anatomy of a true market leader based on decades of research. First up, explosive earnings and sales. This is the primary fuel. Past leaders invariably show dramatic acceleration in their recent quarterly earnings and sales. We're talking 30%, 50%, sometimes even over 100% growth. Think Apple in the mid-2000s as iPod sales exploded, or Nvidia more recently as demand for its AI chips skyrocketed. This isn't just steady growth, it's a powerful surge that screams, "Pay attention." This fundamental power is what attracts the big money. Check out Nvidia's growth on the screen. The chart says it all. Momentum here is hard to ignore. Second, a powerful catalyst. This is the N in O'Neill's famous CAN-SLIM acronym. Great runs are almost always driven by something new. This could be a revolutionary new product, like the iPhone, a new business model, like Netflix's pivot to streaming, new management turning a company around, or even a new industry condition that profoundly benefits the company. This catalyst fundamentally changes the perception of the company's future earning power, creating a compelling story that investors and the market latch onto. Third, institutional sponsorship. A stock simply cannot make a massive move without the backing of large institutions, mutual funds, pension funds, hedge funds. Their immense buying power is what drives prices higher. When you study past winners, you'll see a clear increase in the number of high-quality institutional owners in the quarters leading up to and during the stock's big advance. This is the smart money placing its bets. They do their homework, and they buy in size. Fourth, and this is where history provides its most visual clues: price and volume action. True market leaders don't just meander upwards, they break out. They spend weeks or months consolidating prior gains, forming recognizable chart patterns like the famous cup with handle or a flat base. These periods of consolidation allow weak holders to be shaken out and institutions to accumulate shares discreetly. The moment the stock breaks out of this base to a new high, it's often accompanied by a massive surge in trading volume, typically 50% or more above its average. This volume explosion is the clearest sign that institutions are aggressively accumulating shares, confirming the validity of the move. It's like a stampede of smart money entering the stock. Finally, number 5, relative strength. Leaders lead. They don't just outperform the general market averages like the S&P 500, they often outperform other stocks in their own sector. A simple way to track this is with a relative strength, or RS line. In virtually every past winning stock, the RS line was already in a clear uptrend and often hitting new highs before the stock broke out of its price base. This shows it was already a standout performer even before its major move began. Theory is great, but it becomes tangible when you look at concrete examples. The market isn't just a place to trade, it's a living history lab. By examining the charts and fundamentals of past titans, these recurring patterns become undeniable. Let's quickly look at a few examples. Cisco Systems, CSCO, the 1990s Internet boom. In the mid-90s, Cisco was literally building the Internet's infrastructure. Their earnings and revenue growth were often over 100%. The catalyst was clear: mass commercialization of the Internet. And technically, Cisco's chart is a textbook example of base-on-base action, breaking out again and again on enormous volume Apple, AAPL, the mid-2000s consumer revolution. After years in the wilderness, Apple was reborn with the iPod and iTunes. Explosive earnings, a game-changing product catalyst, and technically, a beautiful cup with handle base in 2004, breaking out on immense volume with its relative strength line already at new highs. Tesla, TSLA, the 2020 EV disruption. From a speculative story stock, Tesla transformed into consistent profitability, scaling Model 3 deliveries, cementing the EV revolution. Technically, it broke out of a massive multi-year base in late 2019. That breakout was definitive, occurring on one of the largest volume spikes in its history, launching its legendary ascent. Different stories, different eras, same blueprint, explosive fundamentals, a powerful narrative, and a decisive technical breakout from a sound base on overwhelming volume. So why is this historical study so critical for you? It's not just about finding patterns, it literally rewires your brain as a trader. 1. It builds conviction. When you've seen the same setup play out successfully dozens of times in your research, you develop supreme confidence when you see it emerge in real time. You're less likely to be shaken out by minor volatility. 2. It cultivates patience. Studying history teaches you what an A-plus setup looks like. This makes you far more selective. You'll stop chasing mediocre stocks and develop the discipline to wait for the unmistakable characteristics of a true market leader. 3. It manages expectations. By studying the full life cycle of past winners, you also learn what the end of a run looks like. You'll see the signs of distribution when institutions begin selling, such as high-volume price breaks and churning price action. This prepares you to sell and lock in profits just as rigorously as you prepared to buy. The process is simple but not easy. It involves printing out charts, marking up bases, breakouts, volume signatures, reading news and earnings reports from that time to understand the fundamental story. By creating a personal model book of these historical successes, you build a mental database of what excellence looks like. This is the work that separates the professional from the amateur. The market may rhyme, but for those who have studied its poetry, the verses are remarkably familiar. Start your historical deep dive today and unlock your greatest trading edge. If you found this helpful, hit that like button, subscribe for more in-depth trading insights, and let me know in the comments. What's one past market leader you've studied that taught you a valuable lesson? Thanks for watching, and I'll see you in the next video.